Esteemed members, very good evening to you. And we from the GST and Indirect Taxes Committee deem it a great privilege and pleasure to welcome each and every one of you to with this very knowledgeable and learning session that the committee organizes off and on. Topics of relevance are discussed here by eminent faculties drawn from across the country. The virtual thing that has happened has been a boon. And let me tell you, in 2020, when the corona happened and when virtual meetings were to start, your committee, the GST and Indirect Taxes Committee, was the first committee to hold a virtual event on April 2nd, 2020. And I must tell you, friends, more than 10,000 members from across the country attended that particular program. And that was on the aspects of supply and the aspects of levy of GST. Continuing our discussion, continuing a trust with the GST, your committee does enormous work in this area by engaging with all the stakeholders as far as GST is concerned. This year in particular, we have been engaging continuously with the state governments. We are doing the capacity building programs for them, empowering them to ensure that they go by the rule book, that they also are facilitating the trade and industry and also professionals. Friends, your committee has already done capacity building for officials of Bihar, Madhya Pradesh, Odisha. And very soon, we are going to continue this with other states in India, especially Goa, Gujarat, Tripura, and of course, a part of Maharashtra, because Maharashtra, a part has already been done. Today, we have here with us CA Sushant Gupta. CA Sushant Gupta is a chartered accountant based in Delhi. He is one of the well-known figures in the GST circle and a person who has immensely contributed to the various knowledge sharing and knowledge enhancing initiatives of the committee. CA Sushant Gupta is a special invitee to the GST and Indirect Taxes Committee and a partner in SARG Associates. He is here to speak about the composition levy in GST. India is a diverse country, all of you know. Many businesses are under the composition scheme. Off and on, there are doubts in the minds of members, in the minds of stakeholders about various provisions relating to composition scheme. Friends, I have great pleasure in inviting CA Sushant Gupta. The office just now tells me that more than 500 members have logged in, and many are almost trying to log in, and we'll have a very full house before Sushant Gupta rolls out his treatise on the composition levy in GST. So friends, let us sit back, relax. I also have the pleasure of introducing Ajay Kumar Ray, Deepak Agarwal, and Impreet Kaur of our committee. They are a backbone of the committee. I must tell you, friends, I must submit that it is because of the great efforts of the staff of the GST Indirect Taxes Committee, Smita Mishra, Ajay Ray, Impreet Kaur, Tanya, Deepak, and all these staff. They have been a great source of strength to all of us. Their immense contribution, 24/7, 365 days, has helped the committee and the institute immensely, and the members also far and wide. And of course, we also have many other staff of the institute who contribute their time off and on, especially Ambika from the SIRC of ICAI from the southern region. She contributes the time for various initiatives of the committee, especially certificate courses and so on. Friends, it is now time for us to hear our very esteemed faculty, CA Sushant Gupta, the one of the very important personalities in the Delhi NCR, I must say. Friends, all of you must be knowing CA Sharat Singhal. All of us were close to him. Sushant Gupta knew him well. I also know him well. And his wife, Vinny Singhal, is now employed in the institute. And God bless her, she is also working for our committee. Sir, Sushant Gupta ji, with these memories of Sharad, And with those memories of 2017, since when you started this tryst, I welcome you to this committee and I welcome you to deliver your talk on the composition. Over to you, sir. Thank you very much.
Thank you, sir. Thank you for the great inaugural session and welcome address. And thank you to the chairman, CA RK sir, to the vice chairman, CA Umesh Sharma ji, and to our office of GST and Indirect Tax Committee for inviting me for today and for the deliberation on the topic composition scheme under GST. Sir, before starting my topic in a formal manner, I must say RK sir is a visionary leader who always empower his team to go ahead with the emerging topics or like the emerging changes. Because as far as the composition scheme is concerned, we people are of the view that it is a very small scheme available for a specific segment of dealers or suppliers. But when I was making this theme presentation over the last week, many new points I have also learned after deliberation of more than n number of seminars. What are the major points that still we are ignoring or still which are hidden in the between the lines? Because there is only one section, section 10, and 5 rules, and the whole topic is covered in 3 pages. Only 3 pages. When we chartered accountants are studying like more than 1,000 of pages under GST with the basic law and amendments, these 3 pages are like, now I can deliver up to 8 to 10 hours on these 3 pages. So much ingredient is there, so much deliberation can be done, so much probabilities can be there. So I thank RK sir for providing me this opportunity, and I will start with my theme presentation. And I hope my presentation is visible on the screen. Anyone from office can confirm, please?
Yes, visible, sir, visible.
Okay. So, sir, as they say, the change is the only constant. So, this statement has keenly been borrowed by this GST and indirect tax of the India, and the finance ministry has left no stone unturned in bringing the changes to this GST and indirect tax law in the country after 2017. Since from 1st July 2017, we have seen this 47th GST Council meeting, and with n number of amendments in the notifications, with the removal of difficulty order, with the amendments by Finance Act, or there will be any budgetary amendments. So moving further, first, let us see where is the composition levy under the GST Act. So my dear friends, this is under the chapter 3 of section, under chapter 3 of the CGST Act. And as per section 10, the whole scheme is there. The section 10 is the governing section for the composition levy. I will start my deliberation as per the slides, and my presentation will be later updated on the Indirect Tax Committee website. And we will take the queries at the end of the session for the ease of convenience, because majorly all of the queries, or I must say most of the queries, must be answered during my deliberation part. So kindly wait for your queries as well. Now friends, what is the composition scheme? First, we will see in a plain language, it is an optional facility. Composition levy scheme is a very simple, hassle-free compliance scheme for small taxpayers. It is a voluntary and optional scheme. It is not a mandatory scheme. GST law has given us 2 options. One is a composition scheme, one is a normal scheme. Normal scheme, we all know, after crossing our limits of 40 lakhs or 20 lakhs as the case may be, we take a registration as per section 22 or 24, and then so on and so forth. We have a proper channel. Okay. We see the transaction, whether it is qualifying as goods or services. Then we see whether it is a supply as per section 7, read with schedule 1, read with section 11, and read with schedule 3. So anything which is not covering under supply cannot be taxable under the GST law. So we fix the supply, then we take the GST rate as per section 9, the levy part, then we take the consideration, the value, taxable value from section 15, then we file the returns as per section 39, and we utilize the credit and we pay the taxes as per section 49. So this is a normal scheme, and this is the parallel scheme for the composition dealers. So we are just running through a basic content. Later on, we will start with the section line to line. We will read the section 10 verbatim. What is the exact scheme? What is the exact things the law want to say, or what are the conditions which need to be complied with to be under the composition scheme? Now, fourth bullet is provisions related to composition levy has been provided under section 10 of the CGST Act and CGST rules 2017. Next, a registered taxable person, not being a casual taxable person or non-resident taxable person, whose aggregate turnover in the preceding financial year is within the certain specified limits, can opt for such scheme subject to fulfillment of certain conditions. Friends, kindly please appreciate in the last bullet, there are this, the line is in bold, the preceding financial year is within the turnover in the preceding financial year is within the certain specified limits, can opt for such scheme. Means if our assessee is in financial year 2021-2022, so we need to check what is its turnover under the year financial year 2020-2021, and according to this criteria we will take and check the eligibility to enter into the scheme. Now whenever a scheme is come, so it may be a beneficial one or it have some limitations also. First I have list down the benefits. What are the benefits of composition scheme? First is it has easy compliance, as no elaborative records and accounts to be maintained as per section 35. Unlike in normal case, we need to maintain separate books of account and separate ITC ledgers. Quarterly payment of tax, statement of tax payment, intimation in form GST CMP 08 to be submitted by 18th following end of quarter, section 39 read with rule 62, means it has a quarterly payment of tax. Next is regular return under section 39 shall be filed on annual basis, GSTR 4 to be submitted by 30th of April following end of financial year. Further, the form of return is simplified, it required less details. So basically these are the three benefits. We need to maintain less books, less accounts and records. We need to pay tax, which is in quarterly mode. We need to file return, that is the annual return, which need to be filed annually. It is not an annual return. Friends, kindly please appreciate, annual return is a return which is filed under section 44, and this GSTR 4 is filed under section 39. So this return is filed annually, but it is not an annual return. Annual return is GSTR 9A, that is applicable to the composition suppliers. This is just a brief introduction. Now we are seeing the limitations of composition scheme. What are the limitations? Friends, ITC is not admissible to suppliers. Whenever a person enters into a composition scheme, input tax credit is not admissible to him. It is a precondition. We will see in what section or in what rule it is mentioned. Such suppliers are required to issue bill of supply without charging GST therein, as per section 31 of CGST Act. Means they will not issue an invoice under section 31, they will issue a bill of supply. So as far as e-invoicing is concerned, so whenever any supplier issue an invoice, but invoices as per 31 read with rule 46, that is a tax invoice on which the GST is collected from the recipient. So in that cases only we need to make e-invoicing. But as far as composition scheme is concerned, the e-invoicing is not applicable to such a persons whose turnover is within the limit of 1.5 crore. But still, for the sake of this applicability of section, I am sharing with you all that e-invoicing will never come into the composition scheme, because here we issue bill of supply and not invoice. Third bullet is recipient also not entitled to ITC on supplies received from composition supplier. Friends, we have studied section 16 n number of times now. It has a condition that any recipient who is entitled, who is seeking a ITC under GST law, should be having a tax paying invoice. So here the supplier is issuing bill of supply, hence the recipient will never get the input tax credit. Now moving further, at a glance I have made a summarization of all the sections which touch upon the composition scheme. So moving with composition scheme, first is CGST Act. In CGST Act we have section 10 of composition levy read with rules, and the rules are rule 3, intimation of composition levy. When we enter into a scheme, then we have this composition scheme, then we have to make an intimation to the department. Then we have rule 4, effective date of composition levy. Then we have this rule 5, conditions and restriction for availing composition scheme. Then we have rule 6, and then we have rule 7, rates of composition levy. Friends, in the CGST Act in section 10, there was a when the GST law was introduced way back in 1st of July 2017, there was only one scheme which was applicable under section 10(1), 10 subsection 1 and 10 subsection 2. But way back in by Finance Act 2019, a special section was inserted under section 10, which was section 10 subsection 2A, which intends to cover those suppliers who are not eligible to opt for existing competition scheme as provided in section 10 read with section 10(2). We will see in the later slides what are the schemes available. But for the sake of brevity, keep in mind that we have two composition schemes under the GST law. And these two composition schemes, we will need to analyze what schemes are, what their conditions are, what their restrictions are, whether both the schemes are available to a person or a supplier, or whether any one of the scheme is available to the person, and in which order we will see the schemes. So this is just an introduction. Now moving further, in the IGST Act, there is no such scheme for competition under IGST. Relevant definitions which touch upon this composition schemes are: first, aggregate turnover as per section 2 clause 6. Next is turnover in state or turnover in union territory as per section 2 clause 112. Then we have a definition, section 2 clause 72, manufacture. Then we have another definition, section 2 clause 78, non-taxable supply. Then next definition is section 2 clause 108, taxable supply. Then section 2 clause 47, exempt supply. So friend, this is a brief chart, we can say. I have tried to cover up where we can see the whole list of sections or definitions that will govern the composition scheme. Now, moving next. First, we will see the definition of aggregate turnover, which is laid down under section 2 clause 6 of CGST Act. And aggregate turnover means the aggregate value of all taxable supplies, excluding the value of inward supplies on which tax is payable by a person on reverse charge basis. Exempt supplies, export of goods or services or both, and interstate supplies of persons having the same PAN to be computed on all India basis, but excludes central tax, state tax, union territory tax, integrated tax, and cess. Basically, it is the old I have studied for the GST audit and GST annual return also, or for the taking of registration as well. Aggregate turnover is that aggregate value of all taxable supplies, including exempt supplies, including exports, having the same PAN. Okay, I don't think it need a much elaboration because it is an exclusive definition. One exclusion is there, or two exclusion I must say. One is the taxes are not included in the turnover, which is but obvious thing. And the second thing is the excluding the value of inward supplies. Means on the inward supplies on which reverse charge is payable, that inward supplies are not added in the aggregate value of taxable supplies. Only our outward supplies are in consolidated. Next, we have definition as per section 2 clause 47. Exempt supply. Exempt supply means supply of any goods or services or both, which attracts nil rate of tax or which may be wholly exempt from tax under section 11 or under section 6 of IGST Act, and includes non-taxable supply. Friends, kindly please appreciate exempt supply is a definition which is very useful for the composition scheme. Because when we say aggregate turnover or when we classify the aggregate turnover, it also includes exempt supply. And in our later applicability part, means when I will touch upon this section 10 subsection 1 and section 10 subsection 2, you will kindly appreciate that the exempt supply is also there, having a major role in fixing the this applicability of composition scheme and eligibility of composition scheme. So kindly bear in mind, exempt supply is a very major thing in the composition scheme. We should read the definition again. Exempt supply means supply of any goods or services or both, which attracts nil rate of tax or which may be wholly exempt from tax under section 11 or section 6 and includes non-taxable supply. Now, next definition is manufacture. Under clause 72 of section 2, manufacture means processing of raw material or inputs in any manner that results in emergence of a new product, having a distinct name, character, and use, and the term manufacturer shall be construed accordingly. Friends, people who are associated with us in this live VCM will agree with me on this ground that manufacture is a long time, what I can say, a disputed word from the eras of central excise, because the meaning has not been settled till from the 1944 until date when the GST was like evolving. So manufacture will still make a major role, but it has not a big role unlike in the central excise. But still in GST also it is having its own flavor. We will see later on what the manufacturer will play. Now under the clause 78 of section 2, non-taxable supply means a supply of goods or services or both which is not leviable to tax under this act or under the integrated GST. Next definition is section 2 clause 108, taxable supply. Taxable supply means a supply of goods or services of both which is leviable to tax under this act. Means any supply which is leviable to tax is taxable supply. Whether we can say taxable supply includes exempt supply as well? No, because exempt supply is a supply which is having nil rate of tax or exempt. It is totally exempt under section 11. Now this is the another major definition, turnover in state or turnover in union territory. Friends, I think many of the people will see this definition for the first time because they might have studied this definition in the initial phase of this GST law when the GST was implemented way back in 1st of July 2017. But this definition is the key definition to learn the applicability and eligibility for the composition scheme. Section 2, clause 112. Turnover in state or turnover in union territory means the aggregate value of all taxable supplies, excluding the value of inward supplies on which tax is payable by a person on reverse charge basis, and exempt supplies made within a state or union territory by a taxable person, export of goods or services or both, and interstate supplies of goods or services or both made from the state or union territory by the taxable person, but excludes central tax, state tax, union territory tax, integrated tax, and cess. Friends, it is similar with the aggregate turnover which we have studied under section 6. But the basic difference is in the case of aggregate turnover, all the outward supplies are taken into consideration on a PAN basis, on a national level basis. Like if Mr. ABC have two registration, one in Delhi and one in Haryana, so his both of the turnover from Delhi and Haryana are consolidated, and then we see the aggregate turnover. But if I see this turnover in state or turnover in union territory, then I will consolidate his all that turnover in Delhi separately. So I will make this, the Delhi turnover will be a turnover in state or turnover in union territory, and the consolidated turnover of Haryana, whether and all the considering all the outward supplies will be taken as a turnover in state or turnover in union territory for Haryana state. Now next, composition levy. So friend, this is the basic section which governs the composition scheme. This is the relevant legislature. Section 10, composition levy. Subsection 1 says, notwithstanding anything to the contrary contained in this act, but subject to the provisions of subsection 3 and subsection 4 of section 9. A registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crore lakh rupees may opt to pay in lieu of the tax payable by him under subsection 1 of section 9 an amount calculated at such rate as may be prescribed. Friends, how the section is getting started? It is starting with non-obstant clause, and the language says notwithstanding anything to the contrary contained in this act. Means it will not give respect to any section which is contrary to the section 10. So it has its own scheme, but only it will be subject to section 9 subsection 3 and section 9 subsection 4. So what the two lines say is a person who is registered under the composition scheme will not follow any other section of the GST law, but they will follow the section 9.3 and 9.4 of this reverse charge. And under 9.3 we know this registered reverse charge from the registered supplier for goods and services. And under 9.4 it is a old scheme that if we purchase from an unregistered supplier, then we need to pay tax under reverse charge under section 9 subsection 4, which was abolished from this 13th of October 2017 due to some basic issues. Now, notwithstanding anything to the contrary contained in this act, but subject to section 9 subsection 3 subsection 4, any person who's a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crore lakh rupees may opt to pay under this scheme in lieu of section 9 subsection 1. Means any person who is fulfilling the criteria and did not exceed the turnover of 1.5 crore may opt to be in the composition scheme, and he can pay the tax under section 10 in place of section 9.1, because in 9.1 there is a normal levy, and when the person is opting for composition scheme, he will pay the tax under section 10 and not under section 9.1. And the basic limits are there. A registered person will pay tax but not exceeding 0.5% of the turnover in the state or turnover in union territory in case of a manufacturer. He will pay 2.5% of the turnover in state or turnover in union territory in case of a persons engaged in making supplies referred to in clause B of paragraph 6 of schedule 2. Friend, these are basically restaurant or catering services. For the simple reason and for the sake of brevity, I will call them restaurant and catering services, because when we'll see the schedule 2 under clause B of paragraph 6, it mentioned this restaurant and catering services. And the C point is 0.5% of the turnover in the state or turnover in the union territory in case of other suppliers, subject to such conditions and restrictions as may be prescribed. So these conditions and restrictions have been prescribed under Rule 7, which we will see at a later stage. So friends, subsection 1 broadly says any person who is not having its turnover in the preceding financial year in excess of 1.5 crore will pay tax as per section 10 and not as per section 9.1, and he will also follow subsection 9.3 and 9.4 for the reverse charge mechanism. But whatever amount he will pay, he may opt to pay under the composition levy, but the amount will not exceed. So these three are the maximum limits which will not be getting exceeded. And we have three categories. One is manufacturer, one is restaurant and catering service, and the third is other than manufacturer and other than restaurant and catering service. So here there is no such restriction whether he is a supplier of goods or service or trader. Any person can be here, but we will see the other conditions also. What are the conditions attached to it? Now, proviso to subsection 10, subsection 1. Proviso to section 10, subsection 1 says, provided that the central government may by notification increase the said limit of 50 lakh rupees to such higher amount, not exceeding 1 crore and 50 lakh rupees as may be recommended by the council. Friends, earlier this limit was 1 crore rupees when the GST law was implemented. And these words have been changed under the GST law. 1 crore and 50 lakh is the maximum turnover which need to be taken care under subsection 10.1. This 1.5 crore is the limit which changed at a later stage. Earlier this limit was 1 crore. Now the second proviso says, provided further that a person who opts to pay tax under clause A or clause B or clause C may supply services other than restaurant and catering service of value not exceeding 10% of turnover in a state or union territory in the preceding financial year, or 5 lakh rupees, whichever is higher. Friends, what they want to say is any person who opt for composition scheme, whether as a manufacturer, whether as a restaurant and catering service provider, or whether as a third category, residual service, residual category. So what the issue was, any person who is providing any services, let's say there is a trader who sells the refrigerator and ACs. He has a showroom of electronic goods, and in meanwhile, whenever a recipient or buyer, or whenever a prospective buyer buy a refrigerator or a AC, he also say, sir, please drop this air conditioner at my place. So he also provide the services of GTA. goods transport agency. He also gives the services of, like, these services will be covered under composite supply for him, as the basically he is giving selling the AC, and also the transportation is also covered under his bill, or it was having a very minute amount, or I would say a maximum it will be 2 to 3% of provision of total this trader total turnover. Means any person who is providing any supply of goods, he is also getting services part. He is also supplying some services also to his prospective buyers. So the government has faced some these issues, and the representation has been made to the government. So they have come up with the second proviso, and it allows the registered person or the supplier under composition scheme to have a marginal value of supply. What I say is marginal value of supply means anything besides a normal supply. You can also make services, and the services will be other than those referred in clause B of paragraph 6 of schedule 2. Means a registered person under composition scheme who opts to pay for clause A, clause B, or clause C may supply services also other than restaurant and catering services, the value of which will not exceed 10% of the turnover in a state, or 5 lakh rupees, whichever is higher. And friends, kindly please appreciate that these rates, 0.5%, 2.5%, and 0.5% are the rates specified in CGST Act. So similarly, when we will see for a Delhi state, so we will need to check CGST law as well as SGST law. So 0.5% will come to 1%, 2.5% will come to 5%, and 0.5% will come to again 1%. And similarly here, this 5 lakh limit will be in CGST and in SGST as well. So we need to check the value of services, which is a marginal value of supply, will be the additional limit which is given to us to remain in the composition scheme. Now this explanation is there for the purposes of second proviso. The value of exempt supply of services provided by way of extending deposits, loans, or advances, in so far as the consideration is represented by a way of interest or discount, shall not be taken into account for determining the value of turnover in a state or union territory. Friends, kindly please appreciate our aggregate turnover is something different as per section 2 clause 6. But here the term referred is turnover in state or turnover is in union territory. So for the purpose of this 5 lakh or value not exceeding 10% of turnover, for only this proviso, the government has made an explanation, and they have also said to reduce the value of exempt supply of services for which you are receiving interest or discount as a consideration. Friends, many people will say, sir, interest is not taxable under GST, it is not a supply. So we will refer the section 2 clause 102 definition of services. Services means anything other than goods and includes use of money. So there it has been mentioned that it is a service, and then it is also covered by section 7. So any person who has any income or who has any supply which is exempt, and the consideration for that exempt supply is by way of interest or discount, then the whole value of that exempt supply should be reduced from this second for the purpose of calculation in this second proviso. I hope I am not fast, and we will see this again under the next slides with the example. Now friends, that was subsection 1 of section 10. Now we have section 10 subsection 2. The additional conditions are there for the composition scheme, because composition scheme is a scheme where we need to check first eligibility, then applicability, then the conditions and restrictions. So under section 10 subsection 1, there was the applicability and eligibility. Now we are seeing the restrictions and conditions which have been laid down under section 10 subsection 2, which read as the registered person shall be eligible to opt under subsection 1 if first, save as provided in subsection 1, he is not engaged in supply of services. Means any person who is engaged in supply of services, he cannot opt for composition scheme. But only one exception is there, that is save as provided in subsection 1. So now you will relate with my words why I have referred this proviso as a marginal value of supply, marginal value of services, because when we see this subsection 1 of section 10, it is saying we have three schemes under composition. One is for the manufacturer. Manufacturer will be of goods only. Then is restaurant oblique catering service. It is a specified service. And then is residual category. And I have taken a pause कि मैंने इसको residual category बोला था कि 0.5% of the turnover in state or turnover in union territory in the case of other suppliers. So considering now this first condition under section 10 subsection 2, now we can analyze he is not engaged in supply of services. Means under clause C, only trader of goods is coming under the residual category because services are not allowed. But friends, due to this, many issues have been cropped up. Many issues had came to the ministry and they have added this proviso. And they have, now you will all understand why this proviso is here. Besides having a trader or besides having a manufacturer work, any person will also provide a small level of services. So to remain in the scheme or to not get debarred from this scheme, this proviso works, provided further that a person who opts to pay may supply services of value not exceeding 10% of turnover. So this is a marginal value of services. My chain will start as first composition scheme, eligibility, then A, B, C. In A, there is a manufacturer. In B, there is a catering or public restaurant service. In C, there is a trader of goods. But the subsection 2 says we cannot make any supply of services. But to abolish or like to defeat this condition, law has provided this second proviso under subsection 10, under subsection 1 of subsection 1 of section 10, which allow us to make this supply of services also, but not exceeding 10% or 5 lakh, whichever is higher. Now the second condition under subsection 2 of section 10 is he is not engaged in making any supply of goods or services which are not leviable to tax under this act. Means any person who is interested to be in a composition scheme will not be a person who is dealing in non-taxable supplies. Means his supply should be a taxable one. And these all are cumulative conditions. Means it is not like any of the conditions, means all the conditions should be fulfilled. If any of the condition is fulfilled, then it means you are not eligible for a composition scheme anymore. Now the third condition is he is not engaged in making any interstate outward supplies of goods or services. Friends, again we are reading clause C. He is not engaged in making any interstate outward supplies of goods or services. Means he can purchase inward supplies, interstate inward supplies he can purchase, but he cannot make any interstate outward supplies if he wants to be in a composition scheme. D point says he is not engaged in making any supply of goods or services through an electronic commerce operator who is required to collect tax at source under section 52. Friends, major hue and cry have been there and major representations have been given to the GST Council and the Ministry. And this recommendation of 47 GST Council meeting, they have made a point that the scheme will work out and they will make a provision under the law by 2023, in which they are saying that any person who is opting for composition scheme can make a intrastate supply through an e-commerce operator, because it is a emerging model and any small businessman is also any small businessman should also get an opportunity to work by an e-commerce operator. So the government is considering this proposal, but as far as today's position is concerned, he is not engaged in making any supply through an electronic commerce operator is a precondition, is one of the precondition to be in a composition levy. Next, E point is he is not a manufacturer of such goods as may be notified by the government on the recommendation of the council. Friends, government has notified some of the products. So any person who is a manufacturer of such products, again, I am making a stress on the manufacturer part. Any person who is a manufacturer of such products, if a person is a trader, then he can come under the scheme. But if any person is a manufacturer of such products which have been notified, they cannot opt for a composition scheme. Last condition is he is neither a casual taxable person or a non-resident taxable person. Means he should be a normal person. Now, provided that where more than one registered person are having the same PAN, the registered person shall not be eligible to opt for the scheme under subsection 1 unless all such registered persons opt to pay tax under that subsection. And what it want to say is, let's suppose Mr. A is a person who intend to get registered as a composition supplier in Delhi, and he has his business in Mumbai also, and he says, sir, in Delhi I will opt for composition, but in Mumbai I will opt for normal scheme because my financial or business model do not allow me to go in composition scheme in Mumbai. So law has given a precondition in the under the proviso, which read as, I am again reading for the purpose of understanding, where more than one registered person are having the same PAN, means Delhi and Mumbai example, the registered person shall not be eligible to opt for the composition scheme unless all such registered person opt to pay tax under that subsection. Means if you are desiring to taking a registration under Delhi state in composition scheme, then you must be taking the registration in Mumbai in composition scheme as well. There is no model that you can take a composition scheme in one state or normal scheme in one state. So in both of the state or in more than one, in case of more than one state, you all need to take a registration as a composition supplier only. I hope I am clear to this extent. Now moving further, but for the purpose of this E point, when I had read, he is not a manufacturer of such goods as may be notified. So I have produced a notification before you, which is read as notification number 14/2019. Central Tax 7th March 2019. Friends, it have been again amended, and the amended notification is there. In this notification, firstly, they have increased the limit of 1 crore to 1.5 crore for the purpose of applicability. And this table has been inserted, and the notified manufacturer of notified products, manufacturer of such goods as may be notified. So what are those goods? Those goods are, first, ice cream and other edible rice. Second is pan masala products. Third is tobacco and manufactured tobacco substitutes. Then later on, this 2A has been added, aerated waters, and it has been added by notification number 43/2019, dated 1st of October 2019. So this entry, earlier there was only 3 products notified, 1, 2, and 3, means tobacco, ice cream, and pan masala. These 3 products have been notified as under this notification, but later on, aerated water has also been added, and recently, on 1st of April 2022, by notification number 4/2022, the 4 entries have also been added. So fly ash bricks, bricks of fossil meals, building bricks, earthen or roofing tiles. So these 4 entries have also been added in this notification. And friends, kindly please appreciate, as I was making the presentation day before yesterday and yesterday, so I have came across this notification 16/2022, which have been recently issued on 13th of July 2022. We are today on 16th. So on 3 days back, on 13th of July 2022, this notification number 16/2022 has been issued. And again, serial number 4 for the entry in column number 3, the entry fly ash bricks, fly ash aggregates, fly ash blocks shall be substituted. This notification has referred as only this under this 4 entry, fly ash bricks, fly ash aggregate, and fly ash blocks will now prevail, and this with 90% or more will be deleted. So considering the overall analysis of this notification, any person who is a manufacturer of these 7 products, or I must say 8 products, 1 to 7 and 2A, aerated water. If a person is a manufacturer of these 8 line items, then he will not be eligible to opt for a composition scheme. I hope I am making my point clear. Any person who is a manufacturer of these 8 line items will not get entry into the composition scheme under section 10 subsection 1. Now moving further, friend, this was subsection 10. This was section 10 subsection 1 and subsection 2. Now we are coming under section 10, subsection 2A. Subsection 2A is a different section which have been inserted in 2019. Friends, earlier what was the issue? That only the goods, only the suppliers who are dealing in goods, like we have seen in this notice in this section, any person who is a manufacturer of goods, any person who is providing restaurant or catering service, or any person who is providing who is a trader of goods. So for the people who are supplying, who are the supplier of goods, there is a composition scheme. But the many people who are the supplier of services, they have also approached to the government, sir, we are not having any composition scheme for ourselves. So government has come up with a composition scheme for supplier of services. Now this subsection 2A is a composition scheme for supplier of services. There are two composition scheme under the GST law. One is for the supplier of goods and restaurant and catering service under subsection 1 and subsection 2, and second composition scheme is under subsection 2A. I am again repeating, people who are watching this live VCM can also note it down on the paper, because this is a main confusion that I have dealt with many of the people who approached me for the query session in the composition scheme. Sir, what is the basic difference? So this is the initial difference. What I am pressing upon is under subsection 1 and subsection 2, the composition scheme is composition scheme 1, and under subsection 2A, it is a second composition scheme. The first composition scheme is for the manufacturer of goods, is for the purpose or for the people who are supplying restaurant and catering service, is for the people who are the trader of goods. But for the persons who are the supplier of services, the only composition scheme is under subsection 2A of section 10. Now, we are now reading the law verbatim. Notwithstanding anything to the contrary contained in this act, but subject to the provisions of subsection 3 and subsection 4 of subsection 3 and 4 of section 9. A registered person not eligible to opt to pay tax under subsection 1 and subsection 2, whose aggregate turnover in the preceding financial year did not exceed 50 lakh rupees, may opt to pay in lieu of tax payable by him under subsection 9(1) an amount of tax calculated at such rate as may be prescribed, but not exceeding 3% of the turnover in state or turnover in the union territory. Friends, plain and simple, क्या कहना चाह रहा है ये? Any person who is intended to be under the composition levy, notwithstanding anything to the contrary. Again, it is starting with a non-obstant clause, unlike in subsection 1 of section 10, but subject to the provisions of subsection 3 and subsection 4 of section 9. Means reverse charge will apply here also. A registered person not eligible to opt. This is the main line, or what I will say, this is a major condition that we all need to stress upon. A registered person not eligible to pay tax under subsection 1 and subsection 2. So friends, kindly please appreciate, any person who intend to be under the subsection 2A of section 10 will need to first disqualify under subsection 1 and subsection 2. Whenever we will start the chain of composition levy, we will first see that the person under consideration, or let's say supplier of services, is first disqualified under subsection 1, then he is disqualified under subsection 2, then he will reach to subsection 2A. Means not eligible to opt to pay tax under subsection 1 and subsection 2. Now he is eligible under subsection 2A, whose aggregate turnover in the preceding financial year did not exceed 50 lakh. In this subsection, limit is 50 lakh for the supplier composition scheme, for the composition scheme of services, and in the first composition scheme, the limit was 1.5 crore. This is another major difference. So any person who is not eligible to opt under first scheme, and if his turnover did not exceed 50 lakh rupees, may opt to pay under this scheme at the rate not exceeding 3%. In lieu of section 9 subsection 1, means in place of normal levy, he can opt under section 2A, and he may now opt for composition scheme. Now friends, unlike in subsection 1, this 3% is under the CGST Act, and in the SGST Act again the 3% will be there. No, so the total will be 6%. So composition levy, the second composition levy has 4 conditions mainly. First, you should not be eligible under subsection 1 and subsection 2. Second, your turnover should not exceed 50 lakh. Third is the maximum limit is 6%, 3% in CGST, 3% in SGST. And fourth is you must be a supplier of services. Goods के लिए नहीं है. This 2A is not for the supplier of goods. It is only for supplier of services. Friends, as there was a condition in subsection 2 of section 10, these conditions, subsection 2 of section 10, there are some preconditions with this composition scheme as well, and we are just continuing it. He may opt to pay an amount of tax calculated at such rate as may be prescribed, but not exceeding 3% of the turnover in state or turnover in the union territory. If he is not engaged in making any supply of goods or services which are not leviable to tax under this act, means he should not be making any supply of services or goods which are not leviable to tax. He is not engaged in making any interstate outward supply of goods or services, means you should be a provider of supplier of intrastate supplies. He is not engaged in making any supply of goods or services through an electronic commerce operator who is required to collect tax at source under section 52. If he is not a manufacturer of such goods or supplier of such services as may be notified that for 8 products, one is tobacco, ice cream, pan masala, aerated water, and 4 other fly ash bricks and all that I have shown to you, that 8 products. If you are not a manufacturer of 8 products, then you are eligible here also. And last condition is you are not a casual taxable person or a non-resident taxable person. So friends, these are the conditions, 5 conditions to be that need to be complied, or if breach of any of the condition will make you ineligible for a composition scheme under subsection 2A. So second subsection 2A के अंदर जो composition scheme है for the supplier of services, these are 5 conditions, and there is a proviso attached to it, provided that where more than one registered person are having the same PAN issued under the Income Tax Act, the registered person shall not be eligible to opt for this scheme unless all such registered person opt to pay under this scheme, this subsection. Friends, kindly please appreciate here the proviso says under this scheme. This is the word. The registered person shall not be eligible to opt for the scheme under this subsection unless all such registered persons opt to pay under this subsection. Means if a person who is in Delhi wants to opt under subsection 2A of section 10, and if he is also having a deemed distinct person under Mumbai, and there he wants to opt under subsection 1 and subsection 2, means not he wants to he wants composition scheme, but he do not want composition scheme under subsection 2A. He wants composition scheme under subsection 1 and subsection 2, the manufacturer, trader, and restaurant and catering service one. So this proviso say if he wants to enter into a composition scheme under subsection 2A, then in all the states he should be having a composition scheme under 2A as well. So he will take this composition scheme only if on a pan-India basis he will opt to pay tax under this subsection only. Means in case in all the states he should follow the same regime, or he should follow the same subsection. Now this was subsection 2A of composition levy. Friends, one point you must all be having in mind, okay, sir, why you are saying this subsection 2A is only for the supplier of services. So friends, kindly please appreciate, and I will take you to my old slide of this subsection 10.1 and 10.2. When we have seen this manufacturer, we have covered here manufacturer of goods, services. In services there is no manufacturer, and in this we have seen the restaurant and catering services. It is only an exception, and in this case there is a other supplier. So other supplier is manufacturer and this service, then other supplier. So when I will classify other supplier broadly, so I will have trader of goods and supplier of services. And when we reach on section 10 subsection 2, here subsection A clearly negate that he is not engaged in supplier of services. Means under subsection 10.1 and 10.2, there cannot be any supplier of services other than restaurant and catering service. So, and this starting line of this 2A read as, if you are not eligible to opt to pay tax under subsection 1 and subsection 2, means if you are a manufacturer of goods, then you will be eligible under subsection 1. If you are a provider of restaurant or catering service, then you will be covered under subsection 1. And if you are a trader of goods, then you will be under subsection 1. But if you are a supplier of services, so subsection 1 and subsection 2 will not allow you. Because of this condition, he is not engaged in supply of services, and the only available scheme is subsection 2A for the supplier of services. So this is a hidden interpretation, or you must say the rule of harmonious interpretation should be there whenever we read two sections together. So we need to interpret in such a fashion that we can identify how the probabilities are coming, or how the supplier of goods and supplier of services can opt under the composition scheme. I hope I am clear to this extent. Now moving further, we have subsection 3 of section 10, composition levy. Option availed by a registered person under subsection 1 or subsection 2A. Subsection 1 is first composition scheme. Subsection 2A is second composition scheme. I will refer them as first scheme and second scheme from now onwards, because we have already covered this under subsection 1, the first scheme, and under subsection 2A, the second scheme. One was for goods people and one was for services people. The option availed by a registered person shall lapse with effect from the day on which his aggregate turnover during a financial year exceeds the limit specified under subsection 1 or subsection 2A, as the case may be. What they want to say, we have in first composition scheme a limit of 1.5 crore. We have a limit of 50 lakh in case of second scheme. So whenever during the year, let's suppose Mr. ABC had a turnover of rupees 1.2 crore in 2021, and in year 2021 he had 1.2 crore, and in the year 2021-2022, in the next year, their turnover crosses 1.5 crore. Let's suppose their turnover reached 1.8 crore. So they are saying, okay, you were eligible for the 21-22, but now when your turnover had crossed this limit, now you will not be you are not be availing the option, and the option shall lapse from the day your turnover exceeds the prescribed limit of turnover. Means whenever your turnover crosses 1.5 crore or 50 lakh during the year, you should come to the normal supplier scheme, and the composition levy will not be further available to you. Now this subsection 4 says, a taxable person to whom the provision of subsection 1 or subsection 2A, as the case may be, apply, shall not collect any tax from the recipient on such supplies made by him, nor shall he be entitled to any credit of input tax. Friends, kindly please appreciate, when I started the composition scheme, I have told you regarding this limitations and benefits. So we have earlier studied that there shall not be any collection of tax from the recipient, and the person who is under the composition scheme will be out from the credit chain as well. So no section will be applied to him, as the section had started, notwithstanding anything to the contrary. So section 16 to section 21, the chapter of input tax credit will not be applicable to the person who is under the composition levy. So this subsection 4 of section 10 establishes this thing only, that a taxable person shall not collect any tax, nor he shall be entitled to any input tax credit. Now subsection 5 says, if the proper officer has reasons to believe that a taxable person has paid tax under subsection 1 or subsection 2, as the case may be, not being eligible, such person shall, in addition to any tax that may be payable by him under any of the provisions of the Act, be liable to penalty, and the provisions of section 73 or 74 shall mutatis mutandis apply for determination of tax liability and penalty. Means what they want to say, any person who has opted for composition scheme, whether under first scheme or under second scheme, are later found that they were not eligible. So government has make a machinery, and under the power of this subsection 5 of section 10, the proper officer may make a assessment or may make an adjudication following the provisions of section 73 and 74. So friends, section 10 has 5 subsections only, and we have covered all the subsections of section 10. This is the basic scheme as per the government under the GST law. Now, after these 5 subsections, there are 2 explanations. Now we are coming to the explanation part. Explanation 1 says, for the purposes of computing aggregate turnover of a person for determining his eligibility to pay tax under this section, the expression aggregate turnover shall include value of supplies made by such person from first day of April of a financial year up to the date when he becomes liable for registration under this act, but shall not include the value of exempt supply of services provided by way of extending deposits, loans, or advances insofar as the consideration is represented by way of interest or discount. Friends, kindly please appreciate, similar line we have already been studied in case of subsection 10, subsection 1 of section 10, where this marginal scheme has been provided. In this explanation was there, the value of exempt supply should not be becoming the part of this value, which is a marginal value of services, shall not be taken into account. Similarly, in these explanations also, the value of exempt supply has been reduced, and for the purpose of computing aggregate turnover of a person for determining his eligibility to be in the composition scheme, value of exempt supply for the consideration, value of those exempt supply for which the consideration is represented by way of interest or discount, they shall be reduced. And now this explanation 2 says, for the purposes of determining the tax payable by a person under this section. In the first explanation, we were computing aggregate turnover for the eligibility. Now we are computing the tax payable by a person under this section. The expression turnover in state or turnover in the territory shall not include the value of following supplies. First, supply from the first day of April up to the date when such person becomes liable for registration. Second, exempt supply, similar interest or discount. So one thing is common, the value of exempt supply for which the consideration is received by way of interest or discount should be reduced from both the turnovers. And in case we are calculating the tax payable in this year, so the value of supplies made in the current year shall be excluded as per first condition of explanation 2. Let us see it with an example. Friends, this is a previous year. I have made a beautiful example for all of you to understand this 2 explanation. Kindly be with me on the screen. I think this red pointer will help you to understand better where I am speaking. First is financial year 2021, first year of business. So this is the current year. In the previous year, aggregate turnover is 0. Previous year is 0. Normal law, what says, section 22, 40 lakh, we have a limit, not liable for registration. If we are crossing the 40 lakh limit, this arrow is we are crossing the 40 lakh limit, then we are liable for registration under section 22. Then registration will be taken under section 25. And if we are taking the registration and we are opting for composition scheme, CS will stand for composition scheme opted under section 10. The eligibility we will need to check. What are the eligibility? Eligibility limit to opt for composition scheme 1, and eligibility limit to remain in composition scheme. Means this is the limit we are checking. Previous year ke case mein, in the case of previous year, we have aggregate number is 0. Means in case of previous year, we are not crossing the threshold of 1.5 CR. Means this condition is okay to us. But eligibility limit to remain in composition scheme. So aggregate turnover of current year should also be followed. Following explanation 1 to section 10. Turnover up to becoming taxable person is includable. What we have seen, only exempt part is reduced. Now we have case 1. In the current year, we have 40 lakh. Under case 1, In the last year, we have 40 lakhs. So my tax was 0. In the current year, I have 100 lakhs. So my composition tax will, under as per section 10, he can continue under composition scheme in financial year 2021-2022 as aggregate turnover in previous year is 1.4 lakh. Sorry, 140 lakh. Means next year maybe we are not crossing the limit of 1.5 crore. If my turnover is 40 lakh here and 100 lakh here, I am still in the limit of 1.5 crore. In case 2, I have my limit of turnover of 40 lakh, so the tax will be 0. But in the current year, after 40 lakh, after taking the registration, I have made a turnover of 1.140 lakh. So the limit for having a threshold of 1.5 crore, the limit for being in the composition scheme is 1.5 crore. 40 lakh we have already made the turnover, and as far as my 1.1 crore limit is there, so it will be under composition tax, and the rest out of this 140, 110 is here, and the 30 lakh will be taxable under normal tax. He has to continue as normal supplier in previous year 21-22, means next year, as the aggregate turnover has crossed 40 plus 140, means 180 lakh has now become in consolidation. So then in the next year, like the example in the current year was 2021. So when we say for 21-22, the limit has already been crossed for 1.5 crore. Now in case 3, 40 lakh is the turnover of financial year 2021, and the assessee has, after taken the registration under composition scheme, made turnover of 200 lakhs. Now the total turnover is 2.5 crore, 2.4 crore. So he has to continue as normal supplier in the next year first. Secondly, out of this 200 lakhs, I have for how many turnover I can take under the composition scheme. Because 1.1 crore has been taken under the composition scheme, and the rest 90 lakh can be taken as a normal tax. Means has to be paid under the normal tax scheme. So explanation 1 and explanation 2 both has been implemented here. First is for the purpose of computing aggregate turnover. Current year, the value of supplies made by such person from the first day of April of a financial year up to the date when he becomes liable for registration. We have taken that, and as per explanation 2, for determining the tax payable, the expression turnover shall not include supply from the first day of April of a financial year up to the date when such person becomes liable for registration. Means in our second case, we have a turnover of 40 lakh. Then the assessee has done turnover of 1.4 lakh. So the total comes to 1.8 lakh. For the purpose of eligibility, we are seeing both the turnovers in consolidation. But for the purpose of computing tax liability, we have reduced this 1.5 crore. 40 lakh here and 1.1 crore here. So this 150 lakh has been reduced out of this total 180 lakh, and only on 30 lakh, the normal tax will be paid as per section 9. And section 10 will be applicable only to the extent of 1.5 crore. I hope I have made both the explanations clear. Now moving further, I have taken an example again for you. Let's say a case study. Mr. ABC, a trader of goods registered in Delhi, has opted for composition scheme in financial year 21-22. His turnover in the state during financial year is 80 lakh. He has made supplies issuing bill of supply without charging GST to its customer. First is, what is the applicable composition tax rate? So friends, to judge how the composition tax rate will apply, first we will see Mr. ABC's status. Now he is trader of goods. So when we will study the composition scheme, so he will fall under subsection 10, subsection 1 of section 10, under the manufacturer, restaurant, catering, and residual category. In the residual category, there was a rate of 0.5% in CGST Act and 0.5% in SGST Act as well. So I am presuming that he has complied with the conditions as specified in subsection 2 of section 10. So analysis will be, Mr. ABC, being GST registered supplier of goods, has opted for composition scheme. He must be availing composition scheme as provided under subsection 1 and subsection 2 of section 10. The applicable composition tax rate shall be as provided in 1% of turnover of the taxable supplies in the state. The relevant rule will be Rule 7. We will come to rules at a later part. Now, second question is, what should be the amount of tax payable by him? His tax liability for current year, financial year shall be 80,000. 1% of 80 lakh. 80 lakh was his turnover and 1% should be applied. So it will be 1% of 80 lakh. Friends, you all people will get surprised, कि, sir, why this basic example has been taken. So friends, you all are, see, we all are chartered accountants, and chartered accountants have a very fertile mind to understand the applicability of law. But I have only one point to make here, which I have mentioned in this note. So composition tax liability shall not be 80 lakh into 1 of divided by 101. To make my point clear, I have taken this example. Okay, we should not treat 80 lakh as inclusive of tax. If so computed, then it will amount to treating turnover as inclusive of GST, which will be incurred as per section 10, subsection 5, which prohibits competition supplier from charging GST to the recipient. In case we take this 80 lakh as a turnover which is inclusive of GST, so our condition, our fifth condition, this we will not collect any tax. Our this subsection 4 condition will get defeated and we will be thrown out of the composition scheme. So whenever the calculation is made, so it will be made and the supplier has to pay this from out of pocket, from his own pocket. And we cannot take this 80 lakh as inclusive of GST. So to make this point, I have taken this example. So let's summarize, because a lot of content we have studied. So with this chart, we can summarize the whole scene. Be with my pointer, this red pointer. Section 10, composition levy. Nature of supplier. Section 10.1 read with section 10.2. This is composition scheme 1. For goods, supplier of goods. For services, supplier of catering services. It should not be a casual taxable person, oblique non-resident taxable person. For goods includes manufacturer and supplier as well. For manufacturer and trader, both. Aggregate turnover for previous year need to be checked. The explanation 1 says interest oblique discount should not be added. Eligibility limit to opt for composition scheme 150 lakh in all state, and in in 8 of the northeastern states 75 lakh. Prohibited supplies of current year. In current year, you cannot make interstate supplies. As per section 10, subsection 2, non-taxable supplies, goods ki, you cannot make non-taxable supply of goods. You cannot make interstate supplies. You cannot make supply through ECO, and the condition of notified goods, tobacco, ice cream, pan masala, aerated, and 4 other products. In subsection 10, subsection 2A, composition scheme number 2, supplier not eligible to opt to pay tax. As per section 10.1, read with 10.2. If you are not eligible in composition scheme, then only you will fall under this composition scheme. You should not be a casual taxable person, oblique non-resident taxable person. The limit is 50 lakh. Here no classification is there. As per section 10.2A, non-taxable supply, you cannot make of goods or services. Interstate supply, you cannot make. Supply through ECO, you cannot make. Manufacturer of notified goods, tobacco, ice cream, pan masala, and aerated water plus 4 products. Supply of notified services, presently not notified. Section 10, subsection 3 says limit on composition benefit. Eligible limit, aggregate turnover should be of current year 150 lakh, 50 lakh in second composition scheme. Explanation say interest or discount should not be included in the turnover. As per section 10, subsection 4, restriction as to ITC. No ITC, composition tax cannot be recovered from recipient. These 2 conditions we have done with under the case study as well. Section 10, subsection 5 says wrong availment of scheme, differential tax liability and penalty can be recoverable by proper officer by giving show cause notice and demand order, as per section 73 and 74. I hope this chart has make a quick review of all the understanding that we have learned in the past 1.25 hours. Like for more than 60 minutes, we are just learning this composition scheme. And for the purpose of deliberation and for the purpose of making these charts, I have also gone in deep dive into this scheme and have came across some major interesting points, which I am again sharing with you with our next slides. Now, friends, one note is there, a composition scheme. First, section 10(1) plus section 10(2). Supplier covered by section 10(1) read with 10(2) allowed to provide marginal value of services other than restaurant public catering service. The removal of difficulty order 1/2019 has been issued, and the interest it has exempt the value of those services on which the consideration is received at interest oblique discount, which is in addition to the marginal limit. So for the purpose of explaining this removal of difficulty order, I have again this made the proviso here. Basically, this is the marginal value of service, 10% of the turnover or 5 lakh, whichever is higher. And the turnover in the state will be turnover in the state excluding exempted interest oblique discount. In case of normal turnover, we will see the aggregate turnover. But in case of having the limits under composition scheme, we will reduce the exempted interest oblique discount consideration. Now, second part is composition scheme 1, section 10(1) plus section 10(2) plus section 10(2)(a). Now we are comparing both the things as per the eligibility part of taxable turnover. Determination of eligibility for composition scheme. Determination of tax payable under composition scheme. When we say we need to check eligibility, then the turnover will be different. When we say that we need to pay tax, then the turnover will be different. Relevant for the year in which supplier becomes taxable person. Turnover up to becoming taxable person, it will be included. Turnover up to becoming taxable person, the limit will be ongoing. So that's why it is excluded. There is nothing to learn. Actually, the thing is to understand if I am in the current year and any person had made a supply of, let's say, 1.8 crore. So 1.5 crore will be exempt. And after the 1.5 crore, only on 30 lakhs, we need to pay tax. So this is not an exclusion. This is the understanding part as well. Now, relevant for all years, turnover of exempt supply of services provided by way of extending loans, deposits, or advances in so far as the consideration is represented by way of interest or discount. Exempt supply of interest and discount that should be excluded from here as well and here as well. We have already dealt with the explanation in this regard and the provision. So friends, time is running very fast. So I am making a quick visit to these rules as well. Relevant rules for composition scheme. Rule 3 to Rule 7. There are only 5 rules, 3, 4, 5, 6, 7. And it has the procedure as laid down in congruence with the section 10. First is Rule 3. Intimation for composition levy. File intimation electronically, inform GST CMP 01 prior to appointed day or within 30 days of the set day or further period as may be extended by the commissioner. It is almost irrelevant as the appointed day has gone very far. It was for the first time basically. If intimation filed after the appointed date, then no tax to be collected and issue bill of supply. Any person applying for registration, if he opts to pay under composition scheme in the form GST REG 1, then it shall be considered as an intimation. Composition supplier shall intimate in form GST CMP 02 prior to commencement of financial year and also furnish ITC 3 form GST ITC 3 giving details of ITC within 60 days from the commencement of relevant financial year. Friend, these are the forms that we are generally filing with the for the composition scheme on the GST portal. So I'm just for the sake of paucity of time, I'm just running through these lines. Composition supplier shall furnish in GST CMP 03 details of stock, inward supply of goods received from the unregistered person held on the preceding day from which he opts for composition scheme within 60 days. Within 60 days from the date from which option is exercised or such further period as may be extended by the commissioner. Any intimations as above for any place of business in any state or union territory shall be deemed to be an intimation for all other places of business registered on the same time. Means if you have made any intimation under any state, then it will be deemed that you have made an intimation in all the states. Now, Rule 4, effective day of composition levy. The option to pay tax under Section 10 shall be effective from the beginning of the financial year, where the intimation is filed under Sub-Rule 3 of Rule 3 and appointed day where the intimation is filed under Sub-Rule 1 of said rule. So it is basically for the whenever you make an intimation So it will be in advance. And in case of composition scheme, you will get the composition scheme from the very first day of the next financial year. Means if you are making, we are in this year 2022, 2023, 2022, 23. So if anyone wants to opt for composition scheme from 1st of April 2023, then he will intimate to the GST portal that we need to opt for composition levy, and before 1st of April 2023, you will need to file this intimation to the GST department. Second rule is the intimation under sub rule 2 of rule 3 shall be considered only after the grant of registration to the applicant, and his option to pay tax under section 10 shall be effective from the date fixed under sub rule 2 or sub rule 3. Friends, what this rule is saying, if you are making any application for the first time for registration, and if you are opting for the registration scheme, let's suppose you have made an application on 25th of February, but if you are getting the application accepted after providing various documents on, let's say, 8th of April 2022, then the effective day of getting into a registration under composition scheme will be 8th of April 2022. It will not be a date of application, it will be a date of grant of registration. So the effective scheme will be applicable from 8th of April 2022. Next is rule 5, conditions and restrictions for composition levy. Friend, these are the additional conditions other than the conditions laid down under subsection 2 and subsection 2A of section 10. Section 10 has its other conditions, that you will not supply interest rate, you will not provide through a ECO who is required to deduct TDS under TCS under 52. So those are separate conditions. These are additional conditions. The person exercising the option to pay tax under section 10 shall comply with the following conditions, namely, he is neither a CTP or NRTP. He should not be a casual taxable person or non-resident taxable person. This is the condition in the section as well. The goods held in stock by him on the appointed day have not been purchased in the course of interstate trade or commerce or imported from a place outside India. Friend, this was a obsolete condition as of now because it was related to appointed day. Now this subsection, this clause C is, the goods held in stock by him have not been purchased from an unregistered supplier, and where purchased he paid the tax under subsection 4 of section 9. Practically, friends, this subsection 9(4) is not there, but the condition is there that whenever there will be any entry in subsection 4 of section 9, then RCM will need to be complied with by the composition supplier, that we have seen is subject to subsection 9(3) and 9(4). He shall pay tax under subsection 3 or subsection 4 of section 9 or inward supply of goods or services, or both, same point. He was not engaged in the manufacturer of goods as notified under clause E of subsection 2 of 10 during the preceding financial year. Friend, manufacturer of goods only of those items, 4 items: tobacco, ice cream, pan masala, aerated water, and plus 4 items, fly ash bricks, and those bricks that we have studied in the notification. He shall mention the words composition taxable person not eligible to collect tax on supplies at the top of the bill of supply issued by him. Every bill of supply should be mentioned composition taxable person not eligible to collect tax on supplies. Whenever we do audit, if any entity is having a bill of supply, we can check this condition whether they are complying with this rule or not. Practically, majorly I have seen 70% of the people are not complying with this rule. So they do not write this on bill of supply. It should be a pre-printed one in case of bill of supplies. Next is, he shall mention the words composition taxable person on every notice or signboard displayed at a prominent place at his principal place of business and at every additional place or principal place of business. Friends, we all know a name board should be affixed on the premises, and in case of composition supplier, composition taxable person should be mentioned on that signboard at the prominent place. Now, rule 2 of sub rule 2, the registered person paying tax under section 10 may not file a fresh intimation every year, and he may continue to pay tax under the said section subject to the provisions of these act rules. So friends, he should not mention, he should not make an intimation every year, but practically we see that every year some of the people are opting. So it is not a debar, but the rule says so. Next is rule 6. Validity of composition levy. Validity. What is the validity of composition levy? The option exercised by a registered person to pay tax under Section 10 shall remain valid so long as he satisfies all the conditions mentioned in the said section under these rules. Means condition of Section 10, Subsection 1 and Subsection 2 in case of first composition scheme plus Rule 5. Second, conditions as laid down under Section 10, Subsection 2A and this Rule 5. As long as you are complying with the condition, you can continue to enjoy under composition scheme. Now, Subrule 2 say the person referred to in Subrule 1 shall be liable to pay tax under Subsection 1 of Section 9 from the day he ceases to satisfy any of the condition mentioned in Section 10 or the provisions of this chapter shall issue tax invoice for every taxable supply made thereafter, and he shall also file an intimation for withdrawal from the scheme in CMP 04 within 7 days of the occurrence of such event. But it is saying, friends, in case you are overruling or in case any composition supplier is not following any of the prerequisite condition, then within 7 days that supplier need to file this intimation of form GST CMP 04 to the department, and from the composition scheme he will now enter into a normal scheme and he will make a tax invoice. He will follow all the procedure as laid down for the normal supplier under the normal scheme. Third sub-rule is the registered person who intends to withdraw from the composition scheme shall, before the date of such withdrawal, file an application in form GST CMP 04 duly signed or verified through EVC electronically on the common portal. What is the major difference is in sub-rule 2 or sub-rule 3 is here he intends to withdraw and here the condition ceases to satisfy. In case the conditions are not complying, then sub-rule 2. In case you intend to come into the normal scheme, then sub-rule 3. Now 4. Where the proper officer has reasons to believe that the registered person was not eligible to pay tax under Section 10 or has contravened the provisions of the Act or provisions of this chapter, he may issue a notice in form GST CMP 05 to show cause within 15 days of the receipt of such notice as to why the option to pay tax shall not be denied. Means if the proper officer says, so he can issue a show cause notice under GST CMP 05 as per this rule. And in sub-rule 5, upon receipt of the reply of the show cause notice under sub-rule 4 from the registered person in form GST CMP 06, now the proper officer shall issue an order in form CMP 07 within a period of 30 days, either accepting the reply or denying the option to pay under Section 10. Means whenever proper officer finds any lacuna in the GST composition scheme of the supplier, he can make a show cause notice to the supplier in CMP 05. Then the supplier will make a reply under GST CMP 06, and then the proper officer will make an order under GST CMP 07. Last sub-rule is every person who has furnished an intimation under sub-rule 2 or filed an application for withdrawal under sub-rule 3, or a person in respect of whom an order of withdrawal of option has been passed in CMP 07 under sub-rule 5, means may electronic furnish at the common portal either directly or through a facilitation center. Means what this sub-rule is saying, any person who is making an intimation or a person who is denied as per the proper officer, then the order withdrawal of option has been passed under CMP 07. It should be uploaded on the common portal. Order of withdrawal of option. When the proper officer say, sir, you are not eligible for the composition scheme anymore, then that order need to be filed on this common portal. Now, friends, let's check the summary of this validity period. One is conditions of composition scheme satisfied. Option remain valid. If the conditions are not satisfied, pay tax as a normal taxpayer, issue tax invoice for supply within 7 days, file form GST CMP 04 as an intimation. Self-withdraw, you can make an intimation that, sir, we are not interested in composition scheme anymore. Before the date of withdrawal, file an application in form GST CMP 04. Similarly, If a proper officer has reasons to believe taxpayer not eligible or contravened act or rules, issue of show cause notice in form CMP 05. Within 15 days, taxpayer must file reply in form CMP 06. Issue of order within 30 days in form GST CMP 07. Accept reply or deny the composition scheme. Officer has the power to do so. Next is Rule 7. Rule 7 is the rates notification, we can say, for the composition scheme. As in the normal scheme, rate notification is there. So for the purpose of composition scheme, the basic rates are specified in the section as itself, but the specific rates are provided in the Rule 7. The category of registered person, first is Rule 7, rate of tax of the composition levy. The category of the registered person eligible for composition levy under Section 10 and the provisions of this chapter specified in column number 2 of the table below shall pay tax under Section 10 at the rate specified in column number 3. First entry is subsection 1 and 2 of Section 10. Manufacturer, other than manufacturer of such goods as may be notified by the government: tobacco, ice cream, pan masala, aerated water, and 4 other bricks products. So manufacturer of goods other than these notified. These are the notified goods. So 0.5% of the turnover in the state or union territory. Subsection 1 and subsection 2, supplier making supplies referred to in clause 6, referred to in clause B of paragraph 6 of schedule 2. What are these? Restaurant and catering service. You must remember the 3 entries: manufacturer, restaurant and catering service, and trader. So the rates are 2.5% of the turnover in the state or union territory. Subsection 1 and subsection 2 of Section 10. Any other supplier eligible for composition levy means trader of goods. 0.5% of the turnover of taxable supplies of goods or services, of goods and services in the state or union territory. Friends, here the basic difference is turnover of taxable supplies of goods. Means exempt part should not be considered. In all other turnover, exempt is not mentioned. But in this, the turnover of taxable supply is mentioned. So in case any exempt turnover is also there for the trader, so that should not be taken into consideration while applying this 0.5% or say 1%, half in CGST and half in SGST. And the fourth one is subsection 2A of Section 10. Registered person not eligible under the composition levy under subsection 1 and subsection 2. Means subject to subsection 1 and subsection 2, but eligible to opt to pay tax under subsection 2A of Section 10. Then 3% of the turnover of supplies of goods or services, goods and services in the state and union territory. 3% in CGST and 3% in SGST. So friend, these were the rules. And I have tried to make a summarization because I believe whenever any professional study, so we interpret in a very wide way, and to make a narrow understanding, or what we say, to make a grip of the subject and to make the best use of this VCM, I made a summary again. So simplified tax payment scheme, I will make a quick run through because all we have studied in the last 1.5 hours. Concessional GST liability without any ITC, Section 10. There are 2 parts: Section 10(1) read with Section 10(2) composition scheme 1, then Section 10(2)A composition scheme 2. It has been added by Finance Act 2019. Here the eligibility says supplier of goods, manufacturer or trader, then supplier of catering services. It should not be a casual taxable person oblique non-resident taxable person. For this subsection, we have a marginal value of services permissible limit, which says, sir, we can take a 10% of turnover or 5 lakh, whichever is higher. Provision to subsection 10, subsection 1 to Section 10. Limit is 150 lakh. In 8 states, 75 lakh. Eligibility aggregate turnover. Explanation 1 to Section 10 says you should exclude exempted interest or discount. ID should be excluded. As per Section 2, there are some prohibited supplies. Non-taxable supplies should not made for goods. Interstate supply should not be made. Supply through ECO should not be done. Manufacturer of notified goods: tobacco, ice cream, pan masala, aerated water, plus 4 other bricks products. You should not be a manufacturer of notified goods. Now, this is a one scheme and the exclusive scheme. Now this is the second scheme. Eligibility: supplier not eligible to opt to pay tax as per Subsection 10(1) read with Section 2. When you do not have any qualification in this scheme, then only you will enter under this scheme. You should not be a casual taxable person (NRTP). 50 lakh is the limit. As specific, other conditions are non-taxable supply you should not make, interstate supply you should not make, supply through ECO you should not make, manufacturer of notified goods you should not be. Tobacco, ice cream, pan masala, aerated water plus 4 other BRICS products. Supply of notified services, nothing notified till now. So friends, I hope we have maken a run through and make a quick revision of all the section, subsection and the rules. Moving further, tax liability. In this simplified chart, rate of tax will be Section 10 floor rates and the actual rates which have been specified in Rule 7. Section 10 say not exceeding those rates. So Rule 7 prescribed actual rates which are lower than the floor rates. Means these are the maximum rates, these are the actual rates. In case of supplier services, restaurant and catering 5%. In case of manufacturer 1%. In case of other 1%. Half in CGST, half in SGST. Only of taxable supply of goods and services. In this 6% for services for 2A. This chart is coming from here only. So this 2A leg is going on the next slide. Eligibility limit, aggregate turnover is 150 lakh and aggregate turnover is 50 lakh here. And the last is documentation of supply. Here is also bill of supply. Here is also bill of supply. ITC available, no ITC in both the schemes. Tax payment quarterly as per time of supply. 18th will be the date. GST CMP 08 payment intimation. Quarterly 18th GST CMP 08 payment intimation. Return will be as per Section 39. The composition scheme return will be filed as per Section 39. The return will be filed is GST 4 annually. 30th April is the last date. Annually 30th April is the last date, GST 4. And the Section 44 return is also there. Annual return annually 31st December GSTR 9A. Annual return GSTR 9A in both the schemes. So this was a quick glimpse I have tried to cover up with this composition scheme. So friends, I'm just running through the last section of my presentation. This was the basic scheme along with rules and along with associated points. Now there is only recent notification, one recent notification that I can share with you, on which has been issued on 5th of July. The due date of GSTR 4 for financial year 2021-2022 is further extended by a late fee waiver up to 28th July 2022. Wide notification number 12/2022 dated 5th July. The due date of CMP 08 for April to June 2022 is extended up to 31st July by notification number 12/2022 dated 5th July 2022. So the both of the forms CMP 08 and GSTR 4, the due date is extended at 28th July and 31st July. So this is the relevant notification for my presentation as of now, which have been issued recently. And friends, one more thing I want to discuss here. When I say that there is an extension of due date or there is a waiver of late fee, what is the basic difference? Since we are in the VCM mode, so we cannot have a two-way communication here. So for the purpose of brevity, I can myself explain. Whenever a due date is extended, so it means the tax payment date is extended. There will be no interest. If the due date is, let's say, what we have seen here is by 30th April, you need to file GSTR 4. And let's suppose that 30th April has been extended to 28th of July. Okay, the due date is 28th July, example. But it is a by way of late fee waiver. But if the due date has been extended from 30th April to 28th July, so what will be the catch? The catch will be interest will be not be liable, penalty will not be liable, any late fee will not be liable. Because if any date is getting shifted, so there are 4 effects. First is tax payment, then interest payment, then penalty payment, then is late fees. But if the government is saying that we are extending the due date by waiver of late fee, means in case of adjudication, you will see that interest penalty can be demanded by the department. But the best part is in case of CMP 08, but it is the last year, but in current year, like they have mentioned the due date of CMP 08 has been extended because it is a challan cum intimation. So in this case, there cannot be a late fee waiver. So because the tax payment is linked to CMP 08 as well. But basic difference is due date and late fee waiver is in case of extension of due date, no interest or penalty can be demanded. But in case there is a late fee waiver, then interest and penalty are still open in case of adjudication. Now, friends, when we study section 18, special circumstances in case of input tax credit, there are 2 points which touch upon my composition scheme deliberation. So I have taken the extract from section 18. What if a supplier switches from composition scheme to normal scheme or normal scheme to composition scheme? If he switches from composition scheme to normal scheme, then the relevant section is section 18 subsection 1 clause C. And if the supplier is switching from normal scheme to composition scheme, then the associated section is section 18 subsection 4. Since we are making a theme presentation on the composition scheme, so I have covered that part also. And the law says availability of credit in special circumstances. Subsection 1 says subject to such conditions and restrictions as may be prescribed, where any registered person ceases to pay tax under section 10, means he is coming from composition to normal scheme. He shall be entitled to take credit of ITC in respect of inputs held in stock, inputs contained in semi-finished or finished goods held in stock, and on capital goods on the day immediately preceding that date from which he becomes liable to pay tax under section 9, provided that the credit on capital goods shall be reduced by such percentage points as may be prescribed. Basically, if you are coming from composition to normal scheme, take the credit on the last day and take reduced credits of capital goods as prescribed in the rules. Then, if you are now going from normal scheme to composition scheme, under subsection 4, where any registered person who has availed of ITC input tax credit opts to pay tax under section 10, means you were under the normal scheme, now you are opting to go into the composition scheme, or where the goods or services or both supplied by him become wholly exempt, he shall pay an amount by way of debit in the electronic credit ledger or electronic cash ledger equivalent to the credit of input tax credit in respect of inputs held in stock and inputs contained in semi-finished goods held in stock and on capital goods, reduced by such percentage points as on date as may be prescribed on the day immediately preceding the date of exercise of such option, or the case may be, provided that after payment of such amount, the balance of ITC shall lapse. Friends, what they are saying, if a person is switching from normal scheme to composition scheme, take the stock of last day when he is entering into the composition scheme, take a day before and value his stock, input in goods, semi-goods, semi-finished goods and finished goods. And take the capital goods as well, apply the GST rate, pay the taxes, and if any balance is there, then the ITC will lapse. So these are the 2 things. Now, let's come to the summary directly. Entry into composition scheme versus exit from composition scheme. Here, the registered taxpayer opting for composition scheme under GST law. Earlier, normal taxpayer was filing monthly return 1 and 3B. ITC was there and he was making the supplies. Entry, they have entered into a composition scheme. Then composition scheme, they make an ITC reversal of stock in hand as per section 18 subsection 4 plus rule 44. Input and capital goods, ITC will be balance life divided by 6 months. File GST ITC 03 with the department within 60 days of relevant financial year to correct your ITC. Registered taxpayer opting out of composition scheme under GST law means they have make a exit. Now composition scheme person will go to the normal taxable person. ITC claim, he will claim ITC on stock in hand as on the last day of the composition scheme as per section 18 subsection 1 clause C read with rule 40. Take the credit of input, take the credit of reduced ITC of capital goods, GST paid on capital goods, let's 5% per quarter. GST ITC 01 declaration to be filed over portal. CA certificate will be required if total ITC is greater than 2 lakhs. This is the overall scheme of switching between the schemes. Overall mechanism of switching from normal to composition or composition to normal. So we should also keep in mind that composition scheme is not restricted to section 10 only. It is also in our this, what we can say, section 18 as well. And the ITC is also affected if we make any switching from the normal to composition or from composition to normal scheme. Friends, last part of the deliberation for the day is distinguish between normal supplier and composition supplier. As we have studied a lot of composition supply today, so I have made a quick chart or brief summary in my style again, where we can see that what can be the possibility and what are the changes. Person registered as normal supplier versus person registered as composition supplier. First is meaning. Normal supplier, we all know, discharging liability as per section 9, paying GST at normal rate. GST cess is also payable there. Person registered as composition supplier, GST discharging liability as per section 10 under two schemes, any of the two schemes. Paying GST at composition tax rate. GST cess is not payable because as per the levy of GST cess act, it has excluded the composition supplier. So that's why I have marked it in the red portion that it is not levied. Applicability, every supplier unless he has opted for composition scheme. By default, you are under the normal scheme. But if you are fulfilling the conditions, supplier who fulfills eligibility criteria as laid down in section 10 and who has opted for tax payment as per section 10, then only you enter into a composition scheme. Means by default, every supplier is in normal scheme. But while making a registration, if you opt for composition scheme, then only you enter into a composition scheme. Tax payment as per section 39(7). Normally, monthly basis by 20th with 3B, which we say. Payment details are submitted through returns. Quarterly by 18th of following end of quarter. Payment details are submitted through a separate intimation of payment. Form GST CMP 08. Billing, he will raise tax invoice under the normal supplier as the normal supplier under section 31, subsection 1 and section 2. GST will be charged to the recipient because it is the theme of the GST that input tax credit is a seamless flow of credit should be there. He will raise bill of supply under composition scheme 31(3). No GST charge to recipient as per rules. Records will be made under section 35. Detailed records, ITC records shall be maintained. Under composition scheme, lesser records, ITC records shall not be maintained. Tax liability, paying GST at normal rate, applied on value of each supply. Paying GST at composite rate applied on the turnover in the state/union territory. Discharge of liability will be through e-credit ledger and e-cash ledger. Here in composition scheme, there will be only e-cash ledger as credited not available. Now, for the purpose of returns, regular monthly returns will be filed by a person under the normal scheme, GSTR 3B or GSTR 1. But in case of this composition supplier, regular annual return GSTR 4 will be filed by 30th of April following the year. Annual return will be as per section 44, GSTR 9 and here GSTR 9A. Friend, there is a basic confusion, sir, whether for GSTR 9A is required to be filed. So whenever a notification is coming from for the GSTR 9/9C, there is a part that if a turnover is up to 2 crore, so there will be an option. So in 2 crore, this 9A is also covered at most of the times. Because if they are giving option to the supplier under normal scheme up to 2 crore, so it is also an option. So that's why majorly the people are not filing this 9A. Now we are open for queries. Ajay ji or any person from the office, if they are there, now I can take the queries. I am thorough with my this theme presentation, and I think I have covered my presentation within the time allotted. That we have 5 minutes only from, we are like 5 minutes away from the 7. So friend, this was my presentation regarding the composition scheme. You can find my details on this, my presentation now. CS Sushant Gupta from Delhi. This is my email ID. For any query, you can reach out, or this is my number.
Sir, please take few questions.
Just a second. Okay, I am opening the window for the questions. Now the first is CA Karishma Shukla. Ajay ji, am I audible, please?
Yes, sir.
Okay, I have opted
Yes, sir. Yes, sir.
window of the queries. I have opened these queries. Now the first is by CA Karishma Shukla. If my client is into a supply of services and registered office in Gujarat, okay, he wishes to get GST registration in Gujarat. If he gets royalty income from Maharashtra for the technical know-how shared at a firm in Maharashtra, can my client get registered under a composition scheme? Madam, no, you cannot take registration as a composition supplier because we have seen that you cannot make interstate supply. Next is Mr. Kapil Bhari. Firm earns commission from foreign companies on supplies made by the foreign companies to India. Can the firm opt for composition scheme for the commission earned? Again, no, sir, Kapilji, because your this intermediary service will be a interstate supply, and interstate supply is not allowed for composition scheme as we have seen recently. Aditi, can I delete the query? What are we have like deliberated, or we should keep them?
No need to delete. You move forward, sir.
Okay. Now this is Swapnil. Mr. Swapnil says, what would be the applicable rates if a person is opting for composition and providing both restaurant and other services? Whether it would be 5% and 6% respectively. Swapnil ji, it will be 5%. I think I have completed this restaurant and catering services very minutely. So you will be opting for composition scheme 1, and this will be covered under 5%. Shaina Kapoor, can a composition dealer supplying goods can also supplies through up to 10% supply services, and what rate of tax services are chargeable? Madam, you can provide this services and you can make a marginal value of supply, and whenever you are making any supply, you can have a supply rate of this residual rate other than manufacturer and other than restaurant and catering. That is 1%. Nikit Desai, can a taxpayer get registered under regular scheme and composition scheme for different businesses? GST portal converts both to regular or composition and allowing one type of registration only. Nikit ji, you can opt any of the scheme, but if you are opting at one place a composition scheme, then you will need to opt for composition is a scheme only at other stages as well. Means if you are opting in Delhi for the composition scheme, then you need to opt for composition scheme in Mumbai only. There will not be a normal taxable scheme available to you. K. Lalita, she says renting of property suppliers. Is this eligible for composition scheme? If yes, can you help us with the rate of tax turnover limit for such supplier? Renting of property, ma'am, I will be saying you can have the second composition scheme and the rate will be 6%. Meenakshi, can a taxpayer running sweet shop Halwai opt for composition scheme at 1%? Madam, Halwai can be covered under manufacturer of goods. Yes, they can cover for 1%. And if they are complying with the conditions. Saurabh Singhal, sir, for manufacturer composition rate is 1%, 1%, 2%. No, it is 0.5%. Earlier, when the GST law was implemented, it was 1%. Then later on, it has been reduced to 0.5% in CGST and 0.5% in CGST. So, Saurabh ji, your total rate will be 1%, not 2%. Mr. Reddy, can a composite dealer supply exempted goods? Can a composite dealer supply exempted goods? Yes, you can apply. You can supply because it is not a precondition. We have mentioned we should not supply non-taxable goods, but exempted can be supplied as they are the taxable, because there is a category taxable and non-taxable, and under the taxable there are two categories, non-exempt and exempt. So as long as your product is taxable, you can supply under the composition scheme. Whether exempted sales are also taxable along with taxable sales under composition? Vijay Kumar. Similar reason, yes. Lavanya, in the definition of turnover, exempt, nil rated and non-taxable are included. We consider the same for applicability as turnover in preceding financial year. But in section 2, he should not be engaged in supply of food, supply of good not leviable to tax. Can you please explain the difference? Madam, in case of turnover, you can have the turnover. It is an exclusive definition. But as long as because aggregate turnover is a definition made for the whole GST Act, and composition scheme is one of the part. But a basic condition or precondition is that there is a scope available in the definition. But as long as there is a precondition in the section 10 subsection 2, so we cannot add that. We are not having any effect of that. But as long as this condition is removed, then the definition will be of use. What you are trying to get out of this. Nitesh Patel. A supplier of service also trades in goods occasionally. Okay, can apply under section 10. Supplier of service also trade in goods. No, it is exclusively for supplier of service, because earlier we have seen if you are not eligible under 10.1 and 10.2, because if you are a trader in goods, then you will be eligible in 10.1. So you will not reach to 10.2A. So you cannot opt for this because the limit will not be available then. Then we have Vijay Kumar, person dealing in trading of goods and services above 10% of goods and hold whose total turnover including services is below 50 lakh has to apply under subsection 1 or 2A. Subsection 1. Vijay ji, subsection 1 mein. Satish Shetty. What is the turnover limit for registration of restaurant? 1.5 crore. Gajanan Pise. Sir, is compulsory to give all purchase details while filing GSTR4 annually? Yes, they are asking. Earlier there was relaxation. Now, Sachin Sharma. Sir, in CMP 08, a trader also deals in exempted goods. Thus, while filing summary in CMP 08, it asks for total turnover, including exempt supply. So, in tax column, the value of tax will be only for taxable supply. Is it right? Sachin ji, you have to see what type of trader. In case of trader, the limit will be on total taxable supply. So, exempted will be reduced from the total turnover as per the formula of Rule 7 that we have recently discussed. You can mention that exempt supply and it will be reduced for the taxable total turnover. Dilip Brahmecha, can composition supplier purchase goods from unregistered dealer? If yes, he is required to pay tax under 9.4. Dilip ji, you can purchase from unregistered dealer, and now 9.4 is not effective as far as unregistered dealer are concerned. So there is no requirement of paying reverse charge under 9.4. It is only for the construction industry, for the cement and other. Vishal Tiwari, importer can register as composition dealer. No, because he is making interstate supply. Swapnil Vanbate, what is the rate of GST applicable on marginal services provided by composition taxable supplier? See, as far as my understanding is concerned, it should be under the residual part, means trader and others. Ghansham Vithaldas, Karkera, what is the rationale of composition scheme other than lesser compliances? Other than lesser compliances, is it not a huge financial loss to the composition scheme dealer? How come it is a composition loss? Because whenever a person enter into a composition scheme, he make his cost benefit analysis, and also the compliance cost is also high in case of GST. So it is called like it is an option given by government. So it is not a compulsion. If it is beneficial, then he can opt. Mr. Ravi, late fee for non-filing of GSTR4. Late fee will be as per section 47, 100 rupees per day. Karishma Shukla, as reduced as per the notification. If supplier registered under section 10(2)(a) as composition supplier of service, can be supply goods to certain limit? No. Dipesh Sawant, hello sir, can we get this notes? Thanks. Sir, it will be provided to the committee later on and you can have that. Vikas Kumar, hi, can we get copy of presentation? Earlier I announced my email ID is sushant@sargcompany.com, or you can connect the ITTC. It will be available on the website by next week. Mr. De Silva, suppose if I am a composition taxable person and I provide both goods and services, if the limit of 10% of turnover or 5 lakh, whichever is higher, is not met, can I opt for composition scheme? No, sir. If you are in 1 and 2, then you cannot opt for 10(2)(a). Anshuka, if any GST registration is GST. Madam, कुछ कहना चाह रहे हैं?
We need to close now. Sir, we need to close now. It's a 7, sir.
Okay, okay. Some of the
You take,
queries are
sir,
left.
this is this last.
I have
You take
taken
this one.
almost
last.
31 queries. Last query I can take, Ajay ji. Then we are closing.
Right, sir. Please.
Yeah, CA Shailesh Verma, my client is providing online
Yes, sir.
education support service. Need to register under GST. Yes, registration is required. So already we have taken more than 30 queries, and I hope my audience has got the benefit of composition scheme from my deliberation. And at the last, I thank the
Sure, sir. Sure.
committee and the office bearers of GST and Indirect Tax Committee, and to all our fellow colleagues and audience that have been patient enough in this VCM mode to accept my presentation and accept my deliberation and for this composition scheme. Thank you, and over to Ajay ji.
Right, sir. Thank you, sir. Thank you very much, sir, for explaining the concept of composition scheme exhaustively. You explain all the nitty-gritty of the scheme along with amendment thereto in a very nice manner, sir. Summarizing all the scheme, differentiating between 1 and 2A and all that. We also thank the participant for joining in large number today. It's more than 1,000 participants have joined today. Hope they have enriched with the healthy discussion held today by the sir. We would also like to inform the participant that we have next webinar on significant development pursuant to 47 GST Council meeting on 22nd July, same time from 5 p.m. to 7 p.m. Finally, we thanks our chairman, vice chairman, our colleague in the office, and technical support, Mr. Parth here. Thank you once again to sir. We can close now. Parth, we can.
Thank you, everyone. Just a minute. PPT will be available in this link, not in ITT site. Or you can mail at gst@ICT.com.
Okay. Thank you.
Okay, thank you.